Indeed, it's one of the best days to be in the stock market. S&P 500 rising nearly 80% of the time on this day, dating back all the way to 1945. This is Bespoke Investment Group, where we got this data from. And joining us now from Weston, Connecticut is Peter Schiff, Chief Executive Officer and President of Europe Pacific Capital. And if I had to predict what Peter would say if I asked him about that stat, he'd say, that's stupid, doesn't mean anything. So with that, am I right, Peter? Is that what you would say if I were to ask you a question about that stat?
Well, if it's a tradition, I mean, if markets have a tendency to go up on the 26th, I mean, why fight it?
Right, exactly right. Well, okay, then I was wrong. You're not. I'll look at the smile. Of course, he doesn't care.
It's only a day.
No, I know. Every day's only a day. We just take them one at a time. I think, in looking at your recent commentary, there is an interesting topic to talk about. Everybody's talking about it, but you have kind of a unique take on it, and that's the Federal Reserve. We're talking about, will they taper? What's going to happen next year? You've said that you think the Fed may reverse some of its tapering. First of all, why? And then how will that play out?
Well, first of all, they haven't even tapered yet. All they've done is announce an intention to taper in the future. And maybe they'll actually get started. But I actually think they eased monetary policy when they announced the taper, because they put so much sugar to coat that bad-tasting medicine that we have an easier monetary policy now. But the Fed, I don't believe, is going to carry out the taper talk. Maybe it will begin it, but it's certainly not going to follow through. And I think it will reverse course and ultimately be buying a lot more mortgages and treasuries each month than it's doing right now. And that's because without the support of the Fed, long-term interest rates are headed a lot higher, and our economy is too broke to afford it. The highest rate we could really afford is 0 at this point. And the markets haven't figured this out yet, that we have a phony recovery. It's a bubble masquerading as a recovery.
Well, that's why I'm saying it's a unique take, because going from the $85 billion a month that they're buying down to 75, whatever it is, you're saying we'll go back above and actually top that $85 billion, which is not a lot of people that I don't think a lot of people think that, but you think of we'll get up $100 billion or something like that again, which would be big news, right?
At some point we will be. Remember, we're already doing more like $95 billion a month. No one ever talks about all the interest that the Fed reinvests in more treasuries and the maturing principal that it keeps rolling over, because the Fed now has a $4 trillion balance sheet. The balance sheet gets bigger, and as interest rates rise, their income on the portfolio gets bigger. So now they have even more treasuries and mortgages that they end up buying. But I think the big story is going to be the tapering out of the emerging economies, the tapering out of China. I think China really wants to back down on its treasury purchases, maybe even start unwinding, actually shrinking its balance sheet. And if emerging markets are selling treasuries, if investors are selling, who's going to buy? The only one left is the Fed.
Speaking of China, we started to focus on this a fair amount last week with all the issues there surrounding the quote-unquote cash crunch and their own central bank pumping money into their own economy. And there seems to be a lot of worries about 2014 in China. First of all, what do you think is going to happen in China? And second of all, how will that apply to what we're talking about here in the United States, if at all?
Well, I still think that we're a much bigger problem. I think the Chinese are likely to see an appreciation of their currency in 2014, and that's going to be a good thing for Chinese wage earners, Chinese consumers, who are going to be able to get a better deal on the things that they need to buy. It's not going to play out so well over here, because as the Chinese currency becomes more valuable, their goods become more expensive. And Americans already have a hard time buying stuff. I mean, look at the Christmas sales. It's the worst since 2009.
That's right.
And I think a lot of the retailers made a mistake. They believed the hype, just like the investors and the economists, and they loaded up with inventory coming into the Christmas season. That's why we got a 4 handle on the third quarter GDP. But I think they're finding out that a lot of Americans just don't have any money to buy stuff. They're spending too much on energy and food. They got lots of debt and lousy jobs.
Right.
And so I think we're going to see some record-breaking sales following Christmas and the New Year.
Oh, that's interesting.
Not sales and selling, but declines in prices.
Right, yes, exactly. Drops in markets, the bubble that you were talking about a moment. I want to point out for the record, by the way, this is the most civil Peter Schiff interview in modern television history. It's been this is the holiday season. This is what we're saying. No screaming and yelling, no back and forth. I do want to wrap it by asking you about maybe a positive place to put your money. If say you're going to be right and it's the bubble and this is what you're talking about and it's going to burst at some point, what is the best asset class? Is it just gold? Is that the simple answer, or is there something else? What's the best asset class to be invested in?
Gold is one of them. Look, I'm not bearish on stocks. I'm bearish on the U.S. dollar. I'm bearish on paper. People just assume that, I'm gloom and doom, so I think the stock market's going down. If the Fed did the right thing for the economy and let interest rates go up, the stock market would come crashing down. But I don't believe the Fed is going going to do the right thing. They're going to keep doing the wrong thing. This bubble is too big to pop. The Fed knows it, so they're going to keep on supplying air. So yes, stocks are going to go up, but the dollar is going to go down a lot more in real terms. And yes, gold's going to go up. If you really want to invest in the stock market, look around the world. There are much better opportunities in foreign stocks in the emerging markets. That hasn't been the place to be in 2013,
right,
but it probably will be the place to be in 2014 and going forward.
Emerging market stocks and gold. All right, Peter, Happy New Year, and thanks a lot for coming on. We'll talk to you again soon. We'll have a fight next time about something.
Anytime. Happy New Year to you, too.